Ladies and gentlemen of the crypto space, we're live on a Friday, March 1st at 11:30 a.m. This is the close of the month. February is now gone, and what a heck of a month February was. We're going to start March off with a new format for the stream. We're also going to publish on X, multi-publish, and see how this goes. I think it's going to be interesting. Bear with me one second, please. My wife is currently interrupting my train of thought. The background is a house in the Hamptons. She's inquiring about the new house that's in the background of my imagery, and now she's like, it makes sense. Well, while talking on stream, let's have a conversation. It's lovely, lovely, lovely. All right, so February is closed, and the month was extraordinary. It was a 43% rip to the upside when everyone's screaming bearish. Do you remember 2020, 21? Oh, rate cuts. When QE, money printer go burr. It wasn't really 2020. It was the midst of the mayhem, but it was towards the end of 21, especially in 22. They're going to have to QE soon. They're going to have to cut rates soon. When 12K, and we have a 43% ripper with interest rates over 5%, and the real economy looking devastated. So maybe it was the case that there's a financial economy and a real economy, and they're two distinct economies that follow two very separate rules. And the interest rates are suppressing the functionality of credit in the real economy, but the way money works in the financial economy behaves by very different pressures and properties. Yeah, I mean, that empirically at this point, seeing how the markets are behaving, that is the case. So, from the highest level perspective, why this divergence is occurring is because even the United States stock market is not a US market. That is a reality. The entire planet purchases these securities, these instruments, and it's not even the U.S. stock market only. It's also U.S. real estate, commercial and residential. Um, and in good part, we have exported these assets. It's a globally owned asset class. And what's most interesting, and this is why we're in the crypto market, is much, much more the case in the crypto markets. So, Brent Johnson pretty much, I agree with everything he says. I agree with almost everything all the macroeconomists say. I just put my own spin on it and digest it. So there's an interesting scenario he's talked about where US equities go up and the DXY goes up and US bonds go up and the crypto market goes up. Now, that's a scenario that makes perfect sense considering the variety of mechanics, particularly where foreign nations are forced to cut, and the United States doesn't cut because the Fed is responsible for the US real economy. And if inflation is elevated, they're not cutting, even though there's interesting complexities with Treasury and the amount of debt they need to refinance in 2024. But if that scenario emerges where the US has a elevated Fed funds rate and the rest of the world is cutting, which they've been doing, they're loosening, cutting. That should put elevated pressure on the DXY, and that should also increase currency supply because as they're cutting rates, that is facilitating credit. Because if you're facilitating credit in the real economy, you're also facilitating it in the financial economy. So if you have an increased currency supply at the margins, some of it's going to go to different places. And obviously, some of it's going to go to the crypto markets. And since it's such a smaller market compared to stock markets, it experiences this outperformance to the upside. So basically, all in all, what we really want to understand is the real economy has a capacity to negatively affect the financial economy, but we really want to understand the financial economy more because what we've seen is they could diverge significantly. And that's the great disparity that they've talked about for a long time now, where the rich get richer. So the financial economy is so susceptible to changes in the total currency supply. And that is the greatest inspection that is so clear heading into 2025, the destination of where we're heading. And I'd be curious if the US keeps interest rates high and they don't cut in 2024. And that's not the mainstream narrative that everyone thinks they understand. QE, rate cuts, no. You could have a scenario where they don't cut rates at all, but because of rate cuts internationally and the amount of debt issuance the US has to print, and the debt is the money, dollars aren't the money, dollars are the currency, and the money is used to print the currency. So the rate cuts internationally introduces conditions where the added money to the system can be used to increase currency supply. Now, I often say things can get weird, and they're already starting to get weird, but they could get really weird. So, take as the base case the US doesn't cut rates at all. Things are going to get weird because everywhere else is going to be forced to cut rates, and they're going to increase money supply at least, or they're going to fresh on the run, which is $10.8 trillion worth of debt coming out of the US Treasury to refinance existing debt. But that those treasuries start circulating and they get leveraged into currency. So there's at least, let's say, 10 to 1, 100 and like $108 trillion that's going to be added to the global currency supply, and that may offset, you know, destruction of currency to a degree. That may not. And if it doesn't offset, if they somehow manage to prevent deflation or defaults, that'd be a massive increase in currency supply. And that's at a 10x. You think they just leverage US money 10x? No, let's say 50x, so a half a quadrillion. Now, so 10x to 50x is 100 to a half a quadrillion worth of currency getting added to the system into 2025. What happens if they do cut rates in the US? Adding to the weird meter. That's adding to the weird meter. Now, what happens if they monetize, which means uh, the amount of money coming out of Treasury isn't bought adequately by the rest of the world? And the Fed needs to step in, which is historically called QE. And the Fed buys some of that Treasury issuance, which is monetizing. Uh, just accept that as the terminology. They're actually directly increasing currency supply because it's not taking out of money, currency supply to purchase what's the Treasury instruments. Then it gets even weirder. So if you hear the word QE or the Fed starts buying in any size, it's going to get so weird. The amount, because the stuff, the currency that comes out of the U.S. is like turbocharged. It's like the creatine of currency. Uh, the currency that gets printed overseas is just the vast majority. The vast majority of dollars are not created in the U.S. They're created internationally. So it's going to get weird just because of the international component. If you see any rate cuts at all, sprinkle on a dash of QE. Oh my, it gets weird. So that's so interesting. Now, there's other rules that we've talked about how to engage with markets. That's a whole complex conversation. The best thing for me to do in that regard is just Q&A, because it's hard for me to just continuously rehash rules of thumb, methodology, strategy over and over again. The best thing I could do is just engage with your questions as you are digesting the rules and the strategies and the methodologies I've discussed. You'll have your own interpretation, your own process of ingestion, and how you're applying these rules so that'll manifest in questions. So, as always, hit the questions, and I'm always happy to talk about that. So we're coming off of a 43% ripper in February, and the most important thing to understand is, does it break all-time high now? Who cares? Does it go down? Who cares? And that's why I so often talk about, are things at a premium or are they at a discount? And where is the worst case bear scenario? Where's the macro structural low? And the low is questionably probably lower than where we are right now. Maybe at or around, I'd say higher than 55, about 55 plus, 55 to 60 is probably the next macro low. Things start to fall apart after it blows off to wherever the hell moon it blows off to. So you're probably buying at a premium relative to the next macro low. And that means you need to understand the path that may play out. Um, do we have a systemic event between now and where it starts running up, breaking all-time high? Maybe. And these are the calculations we do with regard to acquiring or buying. And it depends on your methodology, like DCA. Who cares? Just DCA at any price. And that's kind of what we do for the folks in the stream that subscribe to the crypto as a business model. We are getting weekly income and we DCA Bitcoin, Ethereum, and I have defined that as the cash position. Now, as the market gets frothier, actually treat other assets as the cash position. Recently added Spell to that list as a cash position. I expect that to outperform the macro type assets, the Ethereum, the Bitcoin, the Solana, Atom, the gas tokens broadly. That's just food for thought, and that's just my subjective choice. I obviously have it on the watch list, but that's a big break at the time we had average price. And this is not the best chart. This is the Coinbase chart. And it was added late to Coinbase. Clearly, it was added at the top of the market. But if you look back to the full history of it from a daily perspective, it's just barely getting started. And that's just back to all-time high. And I think it never left the realm of something that was interesting from the CDP perspective, and they've been building the entire time. And most interestingly is they have been renting votes throughout the entirety of the bear market. So they understand the way the system works, the way you need to engage with crypto markets in order to manage PEG. And that's interesting. Now they've clearly underperformed to the downside. I guess that's an interpretation, but they didn't even print a lower low compared to really where they launched. They launched about like 0.0003, and it didn't really get below that, which is interesting. So it's very much a floor price over years at this point. And a break to the upside could be very interesting. Um, Another interesting expectation I have for the structure of the markets in the coming year is where the top 100 land from a market cap perspective. I think it's going to get weird. I've said that. So what is weird from a top 100 market cap perspective? 10, 20 billion for the top 100. I mean, we saw basically a billion, unicorn status as top 100 across the board and ending in 2021. All right, so 10 times that, 10, 20 billion. I think that could be weird and also not unreasonable considering how weird things are going to get from a global monetary supply perspective. Um, so that could lead to numbers that are quite interesting from a cash management position perspective. And it also is very important to understand from an investment perspective, it's probably not the best to invest, like locking and looking for cash flow. This is not the time to do that. You're getting late to invest. A lot of things are significantly off bottom, so that is a very important consideration. especially heading further into this year and certainly into 2025. There's no investing. Investing is done at distressed prices. I did a fair amount of investing in 2021. I'm not going to make the same mistake. You want to invest when something's mispriced, and I'm struggling to find things that are mispriced at this point. Now you can find things that are mispriced. We picked up Ramsey's on Arbitrum. Clearly, Velodrome and Airdrome, they're not mispriced anymore. Coinbase took them way off the misprice scale. But I think Arbitrum and Solana are the outperformers from a currency supply perspective, and that's just a quantitative observation from a DeFi Llama perspective. They just have all the stable coins. So I think they continue to outperform. And in that regard, the volume of transactions and the fees and protocols starting to understand the requirement to rent votes for incentives, so on and so forth. I think that's an interesting set of conditions that allow me to assess that there's a mispricing, and I've found few of those types of opportunities. Now you're going to find plenty of opportunities from a cash management perspective, but the cash management, it's imperative to treat it as something that is cash. You let go of it and you trade it into the most outperforming cash denomination from an FX perspective. And that's not investing, that's FX. And you have to respect that, especially heading into middle of Q1, Q2, Q3 2025, when we're starting to look for the macro indicators where structural top is from a global currency supply perspective. And it'll be there. Uh, there will be a time where anything that's not bolted down, you have to sell it to be a proper fiduciary. And right about now, kind of late to the point where anything that's not bolted down, you should be buying. It's probably like 10, 15, 20% into what I would say is, opportunity and movement and volatility. So we're off the bottom. We are well off the bottom structurally, and that's not even from like a Q4 2022 perspective, where things found bottom 17, 16 on Bitcoin. Um, I'm not even talking about that. I'm talking about confirmation that things are structurally uh, appreciating and capital is rotating back in, and we're not going to revisit certain lows pretty much ever again, likely. Higher lows are to be expected for anything that's structural, anything that's systemic, anything that's infrastructure that provides material support to these emerging markets from a currency management perspective, foreign exchange, and a currency creation perspective, credit, credit facilities, credit utilities, and derivatives too, but that's another story. What a month has the time weighted average price moved up for Bitcoin? Of course. Bear in mind, it takes time from a monthly perspective, but after a 43% ripper last month, it moves up materially. This is a very big move up. We are right below all-time high 2021. It's clearly because of the persistent flows into the ETFs. There's a lot of things that are different this time. Now, it's never different where things diverge from the mean, and mean regressions will always occur. But the flows change that equation. There's plenty of reason to suspect this just keeps going up, depending on grayscale outflows. Um, Plenty of 401ks. Fidelity is now advising 1 to 3%, and that'll just keep going and spreading. So Bitcoin up. Um, and then there'll be a time where everything can't be held on to and it gets sold and then sold and it goes lower and lower and lower until you like, how could it go any lower? But that's not now. So there's two scenarios, and it's really just focus on dollars. No matter where you are in the world, because dollars are so easy to access in the crypto markets, between USDC, USDT, and whatever dollar denominated stablecoin. Clearly, you have to consider the risk profile of the respective stablecoin. But it's basically, why are you going to own a foreign fiat denomination when you can own dollar denominated currency units? How easy they are to access permissionlessly in the crypto markets with no premium. You're down in whatever country in Argentina paying a premium on the gray market for dollars, where you could just get them in the crypto market for a dollar, a relative dollar value. So as the market persists, your cash position, Ethereum, Bitcoin, or wherever you choose, gets rotated. But we're not even close to there yet. This is exciting. This is an exciting time that folks that have seen this type of market activity before, um, we've seen it, and we're back. And it's going to be fun. It's going to be interesting, and we'll go through it together. Need an entry point, but I don't think discount is coming anytime soon. It's all about odds. What's the odds of a discount? But also, what does that mean? You get a 20% discount on Bitcoin. It's already up 400% off its lows. What's a 20% discount on 400%? It's up 400% from bottom already. Where's Bitcoin heading? Is it going to really hit a 10x from here? I don't see Bitcoin going to 600 grand. That changes the whole story for the global financial system. That once you get into territory like that, foreign nations are reevaluating their entire economies. It's a very macro asset, like 10 trill just for Bitcoin. And if Bitcoin does that, do you know what the other stuff does? Oh dear. Now all of a sudden there's a new money. I define bonds as money, and that would be a new money, a Bitcoin money, and an emerging market of emerging markets using this type of money to create currency. That would be a weird world. And how would I put that on my weirdness meter? That'd be really weird. That would be a strange world to see 10x on Bitcoin from here. So I don't have that on my bingo card. I don't have a 10x on Bitcoin for my bingo card. So keep that in mind when you're talking about like a Bitcoin dip. Is that opportunity cost? Depends on the size of the portfolio. If you're a sailor with $1 billion, how many billions of dollars he has? Was it up to 6 bill? 10x? All right, that's cool. He's probably fine. That's if it goes 5x from 6 to $30 billion, his portfolio. Okay, I don't think he gives a shit about anything else, and that's understandable. The size of the portfolio matters. But if you're buying $1,000 worth of Bitcoin, and it'd be weird for Bitcoin to rip a 10x, and that weirdness would produce a $10,000 portfolio, that doesn't seem like a proper, prudent uh, choice. It's not acting in your best fiduciary with regard to fiduciary responsibility. And that introduces greater complexity. So you have to understand the structure of the markets. Ethereum, all right, 10x, that's fine. 10x would be crazy, 33,000. I don't see it at 33,000. Some very renowned folks see it at a 25,000. Okay, that's palatable. Like quarter mil Bitcoin, 25,000 Ethereum, nice round numbers. These are interesting, but it could get weird. So, but you're chasing what, 10x, 5x's, and 5x's, give or take. 10x's would be crazy. I don't see that as the proper allocations of capital. So you want more of the. You have to go further out of the risk curve. I'm not really accumulating anything from cash other than Ethereum and Bitcoin because I don't necessarily need it. And that's hard for me to give that kind of commentary on the stream on how to denominate your cash position. The furthest I'm going out is maybe Spell. I don't see anything right now that, I'm staring at the watch list, and I'm not into the meme coins. I'm not into holding Doge as cash or whiff or whatever crazy shit that people are playing, Pepe. I just it's not appealing to me. We could look at it though for the fun of it. Didn't whiff hit a dollar? Not gonna see it here. Was it really? That's crazy. Trading view. Wow, whiff at a dollar. That's just gross. You have to look at it on the daily chart. I mean, come on. 6 cents to a dollar, 50x, 5 cents, give or take. 50x on the money since January. Is it a premium or a discount? A premium. So look at something else. You move on to something else. You know what's cool about Bonk? You know, we've been talking about Hero for many years at this point. Hero pays in Bonk. So it turns out it pays a fair amount. And USDC should go up as its fees go up. So I think that's going to be an interesting cash flow machine. Hero is not really off its bottom. So that's something to consider. Give you a good denomination. I don't even know if you get a good price from the charts. It's just relatively illiquid. Hero, 10%, 10 cents. Fully diluted, 98 mil. Market cap, 59 mil. That's a micro cap. 59 mil, still micro. I mean, if you're talking about getting in on something of like 2, 3, 4, 5, 10 mil, that's just very rare, very early. It's a very interesting price point. I wouldn't be interested in it from a cash position perspective, but this is still an interesting price point from an investment perspective. It hasn't moved much. Still mispriced. This is by definition mispriced. Now, mispriced means you still have to structure your portfolio responsibly from a mispriced perspective. Never go all in, never spread too thin. Those are the rules of the road. You got 5 things. One of them goes to zero. Two of them go to zero, and all you need is one of them to do well. But this is the type of thing from a multi-year perspective. You know, this asset, in my opinion, I'm looking forward to not even necessarily next cycle. Maybe it gets appreciated this cycle and people start to understand what it is and protocols in Solana continue to build out. It's a nice cash flow, 10, 15, 20% start coming through. It's the cycle after. My mindset is squarely in 2028, trying to understand where things are going to be in the next cycle. And a lot of things is really the cycle after. It's like, where is Polkadot going to be in 2032? And then, and I see these markets as very staggered. Like Cosmos hubs have really come onto the radar. I'm curious where they're going to be next cycle, but I think Polkadot and its ecosystem trails the Cosmos networks by a good solid cycle. So my mind is really 2028, and it's starting to bleed over into 2032. It's going to be a really weird world post 2030. So throw some comments up. See if I can help you guys out with anything on your mind. Crypto Tube. Hey, no, pizza shop wise, makes sense to target these liquid networks. Solana, we got Hero, Mainnet Aura, Arbitrum Tap, Tapioca. When it arrives, well, that is the biggest business on the planet. And pizza shop analogy is meaningful business, and it's something that's understandable. But the most important thing to understand is really what we talk about all the time: credit. Foreign exchange. It's why pretty much everything that produces cash flow is an exchange, an AMM, or something that, look, Abracadabra is back on the radar, and that's credit, CDP. It's literally a stablecoin. So stablecoins are credit. It facilitates endogenous money printing and expansion of the money supply, the currency supply. So, you know, you're going to struggle at this point to find things that are mispriced with momentum. Now, Aura still needs to pivot. Balancer or a balancer ecosystem doesn't have all the pieces in place that the Curve Federation does. What does that mean? Does it mean it pulls something out of left field and does something incredible? All right, that's interesting. So these, from a speculative allocation perspective, you have to size your positions accordingly. Still very productive, and it was incredibly. What a bear market for Aura. 87 cents. Is this bottom? All right, that's interesting. It's getting above the 200 SMA on the daily. Still new. It came out at the end of 22. Literally came out in bear market, and it just bled the whole way down. And it's above the time weighted average price on the weekly. You're not going to have much on the monthly. Maybe a 10 SMA. It's going to take some time to get there. This could be structural bottom. In a bull market where everything is appreciating because everyone says if it's not bolted down, I got to buy it. You're not going to be able to identify the strongest of businesses. Things will get a lot of malinvestment just because it's going up. People buy it. So you got to take the signals for what they're worth. So appreciation doesn't entail the business is strengthening. You need to see the recyclers, the sterilizers, the build out of other protocols that are consuming it. Clearly, it has great vote rentals, but I do like their tokenomics pivot. That's meaningful. From my perspective, just means hold the position and check back in 8 months and reevaluate. And given that it's only a 4 month lock, it's not my favorite style of token lock. I prefer the multi-year lock. It's interesting that they all chose 4 year locks, all the VE protocols, and the 4 month was 90% less than that, but it's interesting the four. It's quite interesting, um, and I'm much more willing to let go of something that's a 4 month lock. If it's up 10x on the money, you're gonna let go of it. So that's unfortunate, and that's why the 4 year lock kind of changes the equation for how to manage that kind of position. Anywho, looking forward to tapioca. Speculatively, could be something very interesting. Um, and I think I handled all the things you're looking at, crypto too. Triple, what do you think about Sui and the meme coins on there? I do have it on my watch list. I don't even have it on my watch list. I have Say, Tia, and Dimension. Uh, I don't care about meme coins. I don't need 10,000x on the money. You get 5x, 10x on the cash position. I'm fine. So set your expectations quite reasonably and think in multi-cycle terms. My recommendation, don't try and make it in one cycle, especially if you're in your 20s. Think much more in terms of 2028, 29. And if you get 10x, 100x, and you're focused more if it's your first cycle, try and retain that capital. And we'll be talking in 2025 and continuously throughout, inspecting move, dollar, bond market to find weakness in the perceived liquidity condition. But we're not even there because we still have to get through Treasury's 10.8 trillion issuance this year. But for the smaller portfolios that are just starting first cycle, the multiples are going to be there. And just you're going to have to evacuate the entire thing, because if you're treating gas tokens and as investments, we don't talk like that in this stream. They're not investments. Cash flow is investments. Gas tokens are cash. So you're literally going to have to sell everything at some point and hold nothing as the whole thing just keeps going down. And most people don't do it. But in hindsight, especially, 100% of the portfolio needs to be sold at some point, and the market will probably keep going up. But as the move indicator pops off the bottom, and as financial conditions start to tighten, Chicago Fed, literally as simple as that. Here's the financial conditions. Oh my God, I have national financial conditions. As this starts to tighten, you just exit everything. And that's why I like the businesses so much, because that's not exiting everything. And the businesses, you're thinking from a structural higher low perspective, multi-cycle structural higher lows. But from a cash position perspective, if it can be sold, it needs to be sold, even if the market's still going up. If financial conditions start tightening, and liquidity looks to be drying up. First cycle, second cycle, third cycle. Second cycle, if you're lucky in your first cycle, if you retain capital post top. If you did, second cycle, you're starting to invest, and then third cycle, it's just you're done. And then you understand the market, and you got cash flow up all over the place. And then you just own businesses, and you're reporting passive income. Tapsy's in the house. Much a pleasure. Dan's in the house. Hey, yes, Sarko. I've actually been considering Curve its cash flow position. XYZ seems reasonable. The yield CVX CRV has been consistent with 20 to 25%. Complicated the LSDs though, because you could sell CVX CRV. 25% is something that's meaningfully above the risk-free rate of return. So from an investment perspective, it's quite appealing. Proportional to the volume through the protocol. If this space expands 10x from a you know currency supply perspective, it could be a proportional yield associated with it. It's not going to get the vote rentals. So the vote rentals, you could have a 10x increase in portfolio, which doesn't mean anything because you can't sell the portfolio. It's a, but you could still retain the 25+% return. So your portfolio goes 10x on the money, and you're still making 25%. So that's the most interesting thing about not going from the LSD perspective. The LSD, you kind of got to treat it as a dividend offering cash position. I don't know. I don't. That's I don't know what that's comparable to. Um, but that's the sentiment because at some point, if it can be sold, it needs to be sold. So CVXCRV is something that certainly can be sold. I love the things that can't be sold, and I love thinking from a structural higher low perspective. And that's the thing that's going to carry me into 2032. I don't have a problem waiting. I have all the patience in the world. Are you doing anything with the new FX USD pools? No, no, no farming, no liquidity providing. I'm not chasing anything. I screamed the high heavens 22 and 23 that this market cycle will come, and I'm going to be calm and cool and not chasing anything, making slow, methodical decisions, slow adjustments. You know what? I'm very interested. What I what's cat? I'm just excited about is Abracadabra's vote rentals. These boys have been consistent for years. For years, they've been just renting every single week. So that could be very interesting. It's a big consistency, and these numbers are starting to go up. The this this isn't unexpected. This is all expected because cash flow is going to be like a chart. It's going to go down in the bear market, up in the bull market, down in the bear market, but I expect the down in the bear market to be a structural higher low. Hope that helps. Have you looked further into stake Dow and convergence any further? No need. Those are beta plays on top of Curve ecosystem, and I have the exposure to the base layer. CVG convergence, very interesting. Accumulating stake Dow, sterilizing supply, and all it does is strengthen the base layer. Now, that's like a conversation of base layer versus beta. Now, look, I go for beta at times, and with base layer, you got to go size. If you have the size, um, maybe it's just better to go beta always. I don't know. You only be able to assess this stuff from hindsight, and that's that. Plenty of beta in my portfolio. They're like CTR is beta on F of N, and that's something to be considered for that inspection as well. Convergence and Stake DAO. Stake DAO has done a hell of a lot of pivots over the years, and it's done very well, very interesting. Talk about accumulation of governance rights. Uh, you remember all that conversation about urine and their predatorial farming, and now it's all about exactly what Michael originally speculated. Just trying to own as much of it as he can to control the emissions. And as the price of it eventually appreciates, the emissions are powerful at influencing liquidity depth vis-a-vis incentives. And I think that's going to play out exactly as originally speculated and as we've assessed and evaluated over the years. If people in their 20s can make it in one cycle, though, why shouldn't they? Uh, yes, that's true, but 99% do not. Almost everyone doesn't. They lose their money. That would just statistically, all you have to do is look at the your X stream, your Twitter stream in a bear market. Everyone loses everything. And you get the rare person that does have that capacity, that evaluation capacity to pick early winners. And of course they should if they can. Almost everyone cannot, which is why I encourage this type of mentality and thinking differently, thinking sustainably, thinking in terms of 4, 8, 12 years. Because if you're 20, if you could have an 8-figure portfolio by the time you're 30, well, mid 30s, 35, let's give it 3 cycles. That's great. That's a dream for any parent for their kid to do something like that over a 12-year period and to have this methodical multi-year time horizon, a multi-year perspective on what kind of assets are meaningful and what they want to buy, what should they buy, and growing something because that produces a good story. I did this over this many years, and this was my strategy and plan. And that's the whole dinner table investing. I mean, sure, if you could buy Dogecoin and get 50,000 X on 5 grand and make a couple of mil. That's cool. Is it sustainable? What was learned? What do you do with the 5 mil? What do you do with it? That's the biggest thing. If you make 5 mil, what do you do with it if you don't know what to do with it? That's everything we talk about. What do you do with it? Then again, I'm also the guy that takes like if you win the lottery and is $50,000 a year for like 50 years or like 2 3 mil, I take the 50 chip. So I also have that contrarian mentality approaching all this. At least it's an alternative to all the other shit social media where folks are like, oh, 10,000%, it's gonna go to the moon. Like, ugh. So anyway, remember last cycle people would just write hold me in this chat as price rose. Yeah, you'll see it again. It's gonna get weird. And that's not the time to be investing. That's the time to appreciate the investments you made when things were mispriced. And it would be damn near impossible to find anything that's mispriced in 6 months from now. So there'll be no more investing. There's no DCAing into investments because you're not going to find the discounts. Now you can rotate from a cash position perspective, and that's a spread. See what's outperforming the faster horse, and that's your cash. And the cash gets sold at some point for the outperforming denomination. The part of the gonna get weird, it's different this time theory that I don't understand are the overall higher interest rates. Does that mean less risky assets succeeding? No, the higher interest rates should cure malinvestment to a degree because it's going to permeate the global financial system with rates of return. And those rates of return get compounded, those rates of return get leveraged and get added onto and doubled. I mean, look at the what Frax does, where you the 5.5 on treasuries, but only part of it is FXS US, whatever the ticker is, and they're able to get it up to 6 and change or whatever. So it's very interesting how that is literally a manifestation of base rates, the risk-free rate, and that changes the structure of the system. That is different this time because over the 2010s, everyone was looking at the market from a capital gains perspective. There was no capacity to invest because there was no revenue, there was no yield. There was no ROI. There was no traditional investment methodology that was possible, but that has returned. And that change isn't going to happen quick. You're still going to see the great outperformance from a cap gains perspective, but the change will happen at the margins. So in 4, 8, 12 years from now, if rates keep going higher, low, higher, high, those are going to be the assets that outperform. And cap gains may become less and less interesting as compared to value investing. Investing. Patiently accumulating curve. Let's take a look at price point. 60 cents. That's a hell of a candle on the 3-month. Higher low, higher low. Dragonfly, 1 month left in the 3-month candle. Sitting above the 10 SMA on the monthly. To me, this screams higher low, higher low, higher low. Don't expect 1,000x on the money like some stupid meme coin. This screams to me a floor in price, and that means the infrastructure it has built is stable and sustainable. Don't be surprised that getting to the previous all-time high and then falling to 380 in the bear market and setting threes as structural lows. To me, that's success. It's doing what it's supposed to do, and I don't expect to see that ridiculous price appreciation that so many folks expect out of their assets. You have to understand assets for what they are and not want them to be what they aren't. Understand the markets, and you'll be able to navigate the markets. What do you make of recent FXSPA? Retest of the monthly TWEP. So we were up at like 1050 with a nice quick run. It was a very quick one. And then the other day it got all the way down to 789. Jesus. Structurally look at it. When you look at a high time frame perspective, it tells you everything you need to know. It couldn't get lower to than this price. It was big sell-offs. And it was all bought, all of it. Well above the time weighted average price, I might add. And it closed at a higher low. You see that? It's as simple as that. That little difference right there is so meaningful. Looks great. Fractal's coming in a couple of days, the snapshot. This is lovely. It's easy for me to say because I got this years ago. It's a 280 entry, and it's a multi-year perspective on things. And look what has come of the protocol since those early numbers when it launched. Go figure. It's a crazy price point, $9. My goodness. This thing goes 10x on the money as producing 10, 15% APR. That's crazy. You have a relatively decent sized position and it goes 50x on the money and it continues to produce 10 to 20% APR. It changes everything. Changes everything. Ethereum at 3,400, Bitcoin 61.7. Ethereum looks to finally be marginally outperforming. I mean, this is not even outperforming. This is finding a bottom. I recently adjusted the cash position a little bit from Ethereum into Bitcoin. I wanted a little bit more exposure. Interestingly, there's thoughts that Bitcoin can outperform, even considering the deflationary nature of Ethereum. Bitcoin just stands alone. It is Bitcoin. Proof of work, the whole narrative, the whole corporate treasury thing. And that'll change over the coming years as maybe Ethereum proves itself a little bit more. But there is a stigma against it favoring Bitcoin. And the emissions are going to get cut and it's going to become scarcer. So that presents complexities for this chart. You know, I don't know what the future is going to be with regard to outperformance of Ethereum versus Bitcoin. But what do I do know? I know Bitcoin's effective as cash. It's going to appreciate cyclically. You're going to have to sell it when liquidity changes the structure at the macroeconomic level. Ethereum is useful as a cash as well. It'll have relative outperformance. Also, it's required to engage in financial activity in crypto markets. So it has its place. So if both are going to appreciate, great. If one appreciates more than the other, I don't really care. Cash is cash, and just respect the market when things start to tell you what the hell's going on in 2025. And in the meantime, it's more favorable to denominate your cash, not in dollars necessarily. So your cash flow from your investments, you can denominate in different things that'll appreciate over time, such as wherever the hell this thing's going to go. Jesus. Interesting, different perspective, right? This thing looks relatively appreciated, blowing through the monthly time weighted average price. Yeah, barely off its lows. I remember playing it last cycle, and I mean, that was crazy. It went from like 0.0004, 0.005. That was just a massive, massive craziness. But that looks very interesting. It was just beaten up with all its pegs mishaps and all its social media and narrative mishaps. But that wasn't the protocol. The protocol is very meaningful. Always was. CDPs are a big deal. Liquidity V1 is still interesting, and it led to V2. So this is all interesting. Does the hidden hand vote interface allocate your votes across bribes to give you an average of them all? No, hidden hand. Oh yeah, that's if you delegate. If you delegate, you get they take their cut, and you get what is programmatically calculated to be the best return. So it's something to consider. Anyway, that's your update for a Friday. Heck of a week, heck of a month. I look forward to March. I look forward to Fraxel's launch, and I look forward to it'll always be a struggle to pull away from this data. And I look forward to pulling away from this data and relaxing and just letting the market do what it's going to do. You know where this, we know the destination. We know the macroeconomic conditions. We spent 2 years talking about macroeconomics. And now, finally, we get to talk a little bit less about macroeconomics and more about exciting appreciation and crypto market activity. But the macroeconomics, we sure as hell understand at this point. And there'll be a point where we get to talk about them again. Then we have another 2 year bear market. So until then, we get to have a little bit of fun. Friday, March 1st, 12:22 p.m. Thank you all for joining me to the end of the stream. 29 people made it to the end of the stream. Tell everyone to subscribe because we can all do a little bit better. Link in the description for Discord and the most rational community in the entire crypto space. I appreciate everyone in there. Enjoy your weekend, and I will see you again next week. Peace.